Hey everybody, hope you guys are having a great day. So today's video is about, you hear on the news and people are advertising homes. You can buy a house with 1% down. And everybody's like, oh my God, not that everybody's rushing for it, but think about it. A 1% down on a house, the pros and cons on it. And then this is gonna be a two-part video. And then the next part of it is gonna be, if you want to sell the house after you say you did manage to buy the house with 1% down, we're going to go over what it costs to sell a house. If you think you just have to pay some commission, some real estate, think again. So let's get started. In the meantime, if you could do me a favor and subscribe, I really appreciate it. It really helps out the channel. Hit the bell notification also so you're notified next time I upload a video. But so let's get started. All right, so let's a con. One of the cons is equity. Give me one.
Right. So if you're only going to put 1% down, you don't have as much equity built into. Yes, you could buy that, right? But if you're putting 1% down, you're paying more for your house over the long haul with your interest rates too. So you have to run that math all the way out so that you can build equity in your home when you go to sell the property.
Right, because what I read about this 1% program, you're gonna have like mortgage insurance on it.
Right, so you're gonna pay PMI as well.
Right.
So PMI is primary mortgage insurance. So if you aren't doing an 80-20 loan to value, so 80%, 20% down, you've paid the property down lower already, so you basically have some equity built into the property. You're going to pay PMI, which is insurance, meaning more monthly expenses on the property till you get that thing paid down a little bit.
So basically your payment's going to be a lot higher than putting more money down. So
your
basically
monthly payment will be higher, yes.
But if the market shifts, you're going to have, not that you won't have negative equity from the get-go, and we'll go over why I think you'll have negative equity from the get-go. But if the market shifts, you're just going to be in a worse position. What's another disadvantage that on these kind of programs? One of the things I read is the interest rates are normally a little bit higher.
Correct, because you're not putting down a larger sum of money. Your loan, like we said earlier, your loan to value ratios are a little bit different. That means that you're probably a little bit more of a risk potentially to the bank.
Right.
So they're going to charge you a little bit more interest because they want to get their, and they also want to get their money back faster.
Right. See, neither one of us are a mortgage person. We're not a financial advisor. Bill's a realtor, you know, and I'm a home inspector. But it was things on the internet and advertisements that we saw, so we read about them. And you know, they think it's such a great deal to get people into houses, you know, to make it more affordable. You know, you have to have a certain amount of income, I guess, and don't go over that income to get this. But are you really doing people a favor by giving them a house with just 1% down, or even if it's 3% down? Because there's a lot of expenses, if you know, that come with houses, like we talked about before. Maintenance, insurance, right, taxes. You know, it's just, you really have to think about it before you're saying, okay, I'm going to get into a house.
Right, and you know, you really, truthfully, you have to evaluate, or you should evaluate, how long you're really going to be there. What's your thoughts on longevity in that property? Because with the limited amount down, when you go to sell your property with the expenses of a sale, you have to make sure that you're not upside down, so you get a check and you're not writing a check.
Right. So okay, so you get into the house, it's one, you put 1% down. Mm-hmm. Now, you know, you think you have more equity, but with the market the way it is, you're not gonna have more equity unless you did something to the house with sweat equity. But say you have to sell it, say your job wants you to move, or you just don't like the house. Now you're negative because the market didn't change. If anything, it might have got a little bit worse. So let's go over some expenses on selling a house. What is the average commission that you have to pay a realtor?
Well, commissions are negotiable, so there is no average commission. So, like I said, everything's negotiable when it comes to a commission. But what you really want to look for is the value in that commission. Is it somebody who sticks a signpost in the yard, puts it on the MLS, and then that's it? Or are you with an agent that's providing you full service per se? There's marketing expenses, things of that nature.
Right, but commissions could cost into the thousands.
Oh, of course, yeah. So let's just say, for instance, you negotiate a 6% commission. You've got the buy side that you're paying out the procuring realtor, and then you have the listing side realtor that's doing the listing side work.
So basically, what Bill just said, okay, say you negotiate 6%, okay, and you sell them the house for the same exact price, just there, that's not all the expenses, but just there, you're 5% down. So think about it, $200,000, $300,000 house, $400,000 house, minus 5% of that. So think about it, that's negative equity right there. What are some other expenses?
Well, and then you're gonna have, obviously you're gonna have to pay taxes.
Yeah.
You're gonna have to pay closing fees.
Right.
You know, doc stamps, title, you know, the title company gets a part of it, the county gets a part of it, etc. There's always fees involved with buying and selling. It's on both sides. It's not one side.
Well, isn't there, like I said, I'm not a financial advisor or accountant, but isn't there capital gains sometimes?
There potentially can be, depending on how long you've owned the property.
Right.
So you know, on that, you've got to take that into consideration. 1% down, 3.5% down, 20% down. That should be taken into consideration if you're having to sell the house quickly. You know, how much appreciation did you actually get? You know, it's on the average, this crazy appreciation we had over the last few years was unprecedented. We hadn't seen it before.
And that's gone now.
And that's definitely, we're back to normal. We're getting into a normal in our area only. I'm only speaking about the Tampa Bay area here, and in certain even segments in the Tampa Bay area. Because
some areas are getting worse. I read about some places in West Coast.
Yeah.
You know, just they're not just planing out. They're getting worse.
Yeah, they're getting worse. We've planed out, we've leveled, and in some of our areas we're going up just a little. So, which is a good thing. We don't want that negativity in our market. So we want to keep that healthy housing market.
So what do you do in a situation like that? Now you put 1% down, you got the house, congratulations. But now you have to sell it, you have to move. Sickness, family member needs you, job opportunity someplace else. What are you going to do? You have negative equity.
You might have to pay that. Like I said, you might have to write a check for that.
For the differences.
For the differences, of course.
Just to sell.
Just to sell, because there's expenses.
Right.
Expenses and taxes.
Right. So basically, or you think a lot of people are going to start short selling, and can you explain what a short sale is?
Well, short sale in a nutshell is, and obviously if you're going to do a short sale, you need to speak with a lawyer. But a short sale is where you negotiate a write-off basically of the difference, the deficit, and you get permission from the bank to sell your property at a lower price. There also could be tax consequences potentially with that. So again, that's why I say you speak to a lawyer if you're considering a short sale. That's not a something that you enter into lightly.
No, it's not. I just can't, maybe you can convince me, give me a benefit of getting a 1% mortgage.
Sure.
Give me a benefit, because I can't think of one, I'll be honest with you.
Okay. So, and we've had this conversation in the past.
Yeah, it doesn't mean we agree on everything, but...
Right, yeah.
All right, go ahead.
Home ownership.
Yeah.
You own a home.
Yeah.
So, there's plenty of people that can afford a home. They just don't have the money to put down. So, let's say you're at 20% on a $500,000 house, 25%, it's $100,000 that you could put down. You know, do you have that money between your down payment and expenses to buy? So do you have that down payment? How many people have $100,000 in the bank?
Yeah, but okay, let me flip it. They don't have the money, so they can get a house and they're homeowner. But now are they a homeowner, or are they trapped in like a jail situation that they can't get out of until the market changes?
So let's say the market changes, right?
Yeah.
And we go back to pre-2020. Let's call it 2019, 2020, pre-2020, pre-2019.
Okay.
So average appreciation in our area was anywhere between that 2 to 5.5% annually on your home value. Just kind of depends on your micro market, right?
Right.
So again,
but this is not nationwide. This is
right. I'm talking because I don't study nationwide numbers. I study local numbers. Right. I mean, I look at nationwide so I can speak somewhat intelligently on things.
But a lot of the people watching these videos are nationwide. They might be California.
Right. So that's where, like, let's say you are in California. The principle is still the same. The numbers change.
Right.
So let's look at, you earn 2% year over year equity growth on your property. Right, so there you go, 2, 4, 6, 8, 10, 12, as you keep going, growing and growing.
The average expenses to sell a house is 8%, right?
Let's call it 8%, because
8% is the average.
We'll just use it as a
So you're talking about, even if you do the 2% that you're talking about, you're stuck in that house for 4 years before you could sell it and walk away with nothing.
Yeah, so you break even.
You break even.
Just using numbers so I can do these in my head.
So why not just pay rent?
Because you're not building any wealth. That's why when we're talking, I always say that you've got to sit down and really speak with that real estate professional and make a plan. What is your goal? What is happening? Or don't enter into something into fear where, oh my gosh, I might lose my job and I have to move to wherever outside and sell. If you have that job concern, you know, then maybe renting is a better.
We actually did a video of, don't listen to everybody on YouTube, whether to buy or not. I'll link it below, or I'll put it at the end of this video.
Right, because you don't want to put yourself into a position. That's where I would sit down and recommend to you, well, if you have some instability in your job, not necessarily that you're going to get fired, but I'm saying that you may get transferred. You know, if that's part of your job model, then maybe buying right now is not the right thing to do, and renting makes more sense.
I just believe putting down 1%, even putting down 3% is in this market. If it was 2 years ago and the increases were rapid and I knew it was going to go for another year or two, I would say, yeah, do it all day long. But with a declining market, and I'm talking about nationally, I feel like you're setting yourself up that you can't accept that perfect job across the country, you know, unless you have money to buy out and have expenses.
Yeah, you have to weigh those pros and cons out 100%, but you still, home ownership is still the fastest way to wealth
over the long term.
Over the long term, this buying a house to gain wealth and you think you're going to flip the house and make money, you're not a flipper.
Yeah,
we're talking about a house that you're living in.
Basically, I just read from a few different sources, okay, that investors pretty much stop buying right now, unless it's a perfect deal. They're being a lot more careful on investments on properties because they study the markets.
Yep.
So, you know, with rates the way they are and the cost of everything, you know, if you're going to do a 1% and you feel that's best for you, I wish you the best. But if you're not 100% sure that you're not going to be in that house for a while, I don't know. I would think twice about it. Just save some money, put more money down, have some equity. You know, if the market even drops 4 or 5% in your area, that's thousands of dollars that you have to bring to the table if you need to sell it in an emergency.
Right, if you need to sell it. That's the key. If you're stable, then don't throw your money away into a rental, like we've talked about in the past.
Right.
You know, there's nothing wrong with renting. I've rented. You've rented.
Yeah.
There's nothing wrong with that. But at the end of the day, the smart move is to purchase a home when it's feasible for you to do so.
But again, between the expenses.
Oh yeah, I get it.
The expenses of selling the home.
Right.
And only putting 1% down, the bank owns the home. That's the way I look at it.
Yeah. No, you're right. You're 100% right. The bank does own the home. But like, if you're gonna sit in a house like your house, for an example, you've been in your house for a very long time.
Right.
Or like my parents,
Right.
they were in their house for a really long time.
Right.
You know, it didn't matter. Now they paid more in interest, technically, right? Because they didn't pay the money up front, and they didn't, you know, let's say example, are 20% down. They're paying more over the long haul, but they recouped their money.
Right.
Because they needed a place to live.
Right. Yeah,
So
no, I understand that.
That's where it all boils down
I just wanted to do this video
Yeah.
because people are talking about, you know, I saw somebody and they were saying, oh, I can go buy a house with 1% down. They have no money. They really don't have much savings. Yes, they might have excellent credit and a job and, you know, meet the income requirements.
Yeah.
But I just think you have to think about it.
You definitely got to be cautious. You limit any options at that point.
Right.
For sure.
And that's it. Anyways, I know this video went a little longer than normal. I greatly appreciate you guys watching. As always, do me a favor, hit that subscribe button, hit that bell notification, and we'll catch you on the next video.
Till next time.
Thank you.